Ladies and gentlemen, good evening. This is Christopher Aaron. It is March 27th, 2019. Welcome back. We are going to focus here on the gold price. We've been looking at this fairly closely for the last several weeks. There is some important information that I want to bring to your attention. And I would ask you simply, as we look at this week's update, we're looking at gold as priced in US dollars. As we're looking at this update, please keep in mind the difference between the message, which you may not agree with, you may not like the message, and the messenger. Okay, I am the messenger. I try to bring a message to you which is as close to truth, as close to accuracy as possible. So I would simply ask you to look at that, respect that, as we look at the actual message itself. Let's get into it. I want to let you know, if you're watching on YouTube, there's a special offer for you only. If you want to try our premium subscription, I recommend that you try it. This is the week to try it because we have a 1-hour premium video update coming out this Monday. It's exactly how you see this video right now. It's just much longer and much more in depth. So you can watch that entire 1-hour video for $1. Now, I would have made this free. It's just my credit card processor doesn't allow me to capture names and email addresses for free. It forces me to charge at least $1. So I've done it for $1. There is a link below. Make sure you use the special link below. Do not use the normal link. The normal link will take you to the regular subscription. The link below will take you to this one, available for the next 3 days only. 2 weeks for $1. I highly suggest you take advantage of this. If you like the type of analysis that we are doing here, we are looking at the prices of gold and silver, and we're looking at it not from the fundamental standpoint. You know, we can talk about fundamentals. Federal Reserve is printing more money. Yes, of course, but they've been doing that every year for the last 75 years. So just because the Fed is printing more money does not mean gold and silver have to rise. Gold and silver can fall for decades at a time, even while the Fed is printing money. What do we look at? It is the actual price of the metals itself. And we're noticing gold coming into that resistance. We were talking about this last week in the 1325 region, jumping ahead of myself here. And switching over to look at silver, silver finding that resistance. We were talking about this last week. 1555 to 1560, there it is, backing off into the low 15s. So the big warning bell that I'm trying to sound right now, and I don't care if you don't like what I'm going to say. I don't care if it makes you upset because it's against your own investments. I would rather be known as someone who speaks plainly about the truth as he sees it rather than bow to any pressures. And, if you think that the only people that are trying to manipulate this market are the people trying to force it down, I'll tell you this. Look at the people who are only trying to say that the price is moving higher week after week, month after month. I took my hard knocks in this market. I want to show you this example. I want you to understand why I'm so keen on studying the technicals in the gold market. It's because I learned from history, I learned from my own pain in ignoring the signal in the past, and I'm pounding the table here to try to get people to not ignore this warning. I am not making this up. This is visible on the charts. Please have a look. This is what appeared from the year 2010 through 2011. We are looking at the gold mining sector on the top and the price of gold on the bottom. Look at this signal. It's very similar to today. Look at how, as the price of gold advanced above this 1425 level, notice gold moved from 1425 to 1575. A $150 move in gold in 6 months higher. Notice how the gold miners did not move higher at all. Zero gain. What were they saying? What was the entire gold mining complex saying? Were they all wrong? Were they all delusional? Were they failing to keep up with the cash costs? Was there less gold coming out of the ground? Was there more problems with the geopolitical tensions in the gold mining companies? Let's see. Gold continues to rise, $1,575 to $1,925 per ounce over the next 6 months. This is another $350 advance. Look at what happens to the gold miners. They did not move at all except for this little false breakout here at the very end. They basically, so you had a $500 rise in the price of gold in 1 year, less than 1 year. 1425 to 1925, the gold miners did not move at all. Why am I so keen on this topic? Why am I trying to warn people about this right now? This is what we were just looking at, that period right there. It looks like nothing special until you see that signal, that negative divergence, foretold an 80% decline in the prices of the gold miners and a 40% decline in the price of gold itself. So we can see as the gold miners refuse to advance, as gold is advancing, this tends to be a major negative divergence signal. Ignore this at your own peril. Back to the future. Of course, we talk about the present, and then we bring this into the future. So, exact same chart. Here we are today. What are we looking at? The gold miners on the top, the price of gold at the bottom since the beginning of 2016. Let's update this. Here's where the gold miners are. Draw the green arrow back and look at the various prices that have corresponded with where we are in gold right now. Back here in early 2016, 1200. Back here in late 2016, 1136. Back here in the middle of 2017, 1190 to 1200. Back here in late 2017, 1240. Where are we today? Same price on the gold miners. Where are we? 1316. Something does not appear right in this picture. I'm simply asking you to take a good look in this and decide what type of investor you are. Now, if you can afford, if you're in the type of situation where you're just looking at this divergence and you are just going to ignore it and say, I don't care, that's fine. Bless you. But don't tell those individuals who are not in that luxury. In other words, if you have more of your net worth, if you have over 30% of your net worth invested in the precious metals, and especially if you need to use this net worth, let's say at some point in the next 3 to 5 years, especially in the next 10 years, I would say that if you're ignoring this signal, you're doing so at your own peril here, because this could turn out to be a decline that doesn't just bring us back into the previous range here. This could be something that results in the similar signal that we saw in 2011. We saw an 80% decline in the gold miners. We saw a 45% decline in the price of gold itself. Same signal is setting up now. I have studied this signal going back through the freely traded era, going back to 1971, and that is why I'm trying to bring this to your attention. This signal, when it appears over a multi-year time period such as we see now, has never been wrong. It's never been wrong. Not once. So could this be the first time that it's wrong and gold continues to go higher, for the next 5 years? Gold goes to 3,000 or 5,000 an ounce while the gold miners just are wrong the whole time. I mean, could this be the first time that happens? Yeah. There's a first time for everything. But I would say history is against you. The sum of the data that we can study as human beings is against you. And I've seen more than a single individual completely wipe out their entire net worth, years worth of savings by ignoring this signal. So I am trying to have individuals not ignore this signal. That's it. I hope this is the first time this signal is wrong, but history suggests against that. So I want to let you know, if you want to work with me, if you want to strategize for how you might consider altering your portfolio based on this signal, please know you can reach me on the consultations tab on the website. What I wanted to discuss with you is the free trial that is coming out. Excuse me, not free, it's $1. As I said, this is $1 for 2 weeks of the premium subscription. And the point that I wanted to make is, if you like this kind of analysis, you can't afford to miss what's coming this weekend. This Monday is our 1 hour monthly special. It's in this format, but we cover everything, not just gold, but silver. We cover the mining sector in depth. We cover the U.S. bond market, the U.S. dollar, the stock market, the broad commodity sector. There's so much going out. I simply can't imagine, if you have any legitimate sum of money that you are investing in this sector, I personally can't fathom that you don't find value in the information that we're putting out. That's why I'm making this available for $1. So you can watch that for $1. And if you don't find value in it, you can cancel at any point within the first 2 weeks and you pay nothing more. So you get to watch that entire video, everything for $1. But I suggest you stay on. Now, it's no hard feelings if you choose to cancel. Literally. Just send us an email. Let us know you want to cancel. It's no problem at all. But I think that you are going to want to plan ahead for what is coming for gold, silver, and the mining sector, which is why I publish this research, which is why I encourage you to take advantage of this for that $1 amount. Thank you for tuning in. I will see you this time next week. Click below for that link.